Hey guys, it's Luran here and welcome back to my channel. Guys, in today's video I want to talk about SDC, which is Smile Direct Club. Now this stock is reporting earnings tomorrow, November 8th, after market closes. And I want to do a quick technical update on this stock to let you guys know exactly what's the setup that we have brewing here right now and what this stock is expected to do in after its earnings reporting. Guys, before we jump into today's analysis, if you're new to the channel, remember to subscribe. Remember to smash that like button. It helps with the algorithm. It helps the channel to grow. So without further ado, let's jump right into it, guys. So let's look at the technical setup, guys. Right now, Smile Direct or SDC is in a wedge setup. And as you guys know, I love to trade wedges and triangles. That's my specialty. That's what, that's where the biggest opportunity comes, guys, when a stock is in a wedge setup or a triangular pattern. When that occurs, guys, the stock is primed to move huge in either direction, either to the upside or to the downside. If you've been tracking the stock market, this is no secret. You can look these up. You can, take 10 stocks, for example, your 10 best stocks, and go back in their history to see exactly when does the stock move the most. That's when it's in a wedge formation or a triangular formation. So let's look at this one, guys. Smile Direct is in a triangle. It's in a wedge formation. It's approaching the apex here. It has all the conditions necessary to complete a wedge setup. That's what's being exhibited here right now on this stock. Now, as you can see here, the stock is feeling a lot of pressure here. You look at the analyst upgrades on Finviz, you can see we had a lot of downgrades from August all the way to September. 9 to 7, 17 to 11, 6. We had an outperform by Credit Suzy recently of 11. This one is the only upgrade in a long time. But in my opinion, this stock is way oversold. There's no question about it that this stock is oversold. And look at the short float here, guys. So we have 31% of the float of this stock is shorted. That's ridiculous. Now, let me show you guys something here for you guys to pay attention to. So back in January of this year, the stock was up to $16 and the stock is down 67% to date. Now, if the stock is down 67% to date, why do we still have 31% short of the float shorted of this stock? That means that the shorts, they're being greedy. They don't want to get out. Now, there's other opportunities. There's other stocks out there where it's, up like crazy, but they're not shorting those stocks so much. So what usually happens, that's like exactly what causes short squeezes, guys. We have shorts going in, shorting stocks, and the stocks get beat down, and then the shorts do not want to exit. They want to continue to short the stock even further. And that's where, the hedge funds and the money managers, they come in and they buy these stocks up at key levels. And that creates short squeezes. Why? Because those guys don't want to get out, the shorts. They don't want to get out. They're stuck in there. They're stuck in their ways. And they think it'll go down to zero potentially. So they stay in there. And that's not going to happen with this stock. This stock has potential, and this stock will be a competitor in this space. This stock has a great consumer base, and it's growing. So in my opinion, and this is this medical device company is making aligners for people trying to straighten their teeth and things like that, and that's a growing industry. And more and more people are adapting the Smile Direct approach to straightening your or aligning your teeth. So the fundamentals for this company might not be the best right now. They're losing a lot of money. Well, not a lot. They're losing money. But I can see in a year or two, this company turning around and becoming profitable potentially. So that's my take. So these shorts will be in trouble. If the stock, I don't know what the reporting will be. As you can see, the last two earnings, they have missed badly. And this stock can miss, and this stock can still experience a short squeeze, in my opinion, because these shorts are overdoing it. The stock is in a technical setup, and it's a bullish technical setup, by the way. This is a bullish setup, and this stock, you can see a short squeeze. Let me show you one stock that experienced a short squeeze recently, and it pulled back. So it doesn't mean when it squeezes, it'll go up and stay up, right? So we have Nikola, which is a EV manufacturer. Look here, guys. He had a similar technical setup last week. I did trade this one, by the way, guys. I did 13x on this stock last week. I entered right here, the 27th, and I held it all the way into earnings reporting, and I got out the afternoon of November 4th. See what happens after that, guys? It came back down, but it had a short squeeze and it pushed this one up. You had a lot of shorts covering and things like that. It doesn't mean it's over. The short squeeze can continue and this stock could continue to squeeze higher. That's exactly what will happen with Smile Direct, guys. Expect this one to go, around $7, $7 to $8 on earnings reporting. Best case scenario, if we really get a massive squeeze, we can see this one go all the way to $10 to $11 on a massive squeeze. Worst case, this one falls out. We can see it falling off to all-time lows, which is about $4. You can see the lowest point here. That's the worst case scenario, but I foresee a short squeeze on this one because, like I said, we have 31% short float, and we're in a nice bullish technical setup. So expect this one to run. Better yet, if this stock should report positive earnings, oh my goodness, that's even a better catalyst for this one to gap up on earnings reporting and move higher the day after earnings reporting. So that's the play setup here. I'm trading this one, guys. Like I said, I have strike at $6.50, $7. Call option expiring November 12th. I also have some put as protection, so $4.50. I'll be doing some puts as well. Usually with these type of plays, I usually go 70-30 ratio. So my bias side will have more of the capital, and then my non-bias side, which is the downside for this particular stock, will have 30% of my capital. So let's say, for example, I'm investing $1,000. I'll have $700 for calls and have $300 for puts. And that's it, guys. That's it in a nutshell. I want to show you guys quickly here one stock that had a massive short squeeze last week. For some reason, I missed this one. I didn't trade it. I saw it after. But this one was insane. We had a nice rising wedge, as you can see here, guys. This one had a 20% short float. And look what happened there, guys. The stock went crazy. The stock went up 214%. That just destroyed all the shorts that wanted to short this stock. And you see we had great earnings for the past, 6 quarters. So that's what you can expect here with Smile Direct. It's been beat down, almost 70% down already, and the shorts do not want to leave. So, these hedge funds will push this one higher. Wall Street bets watching this one as well. So watch out for the gang to really jump on this one. You have the hedge funds, you have the retailers, you have the Wall Street bets jumping on this one to potentially squeeze it higher. So watch out, guys. You don't want to miss this one. You want to get in and then see if you can capitalize on some of that win. So that's it for Smile Direct, guys. I'll wrap this video up. Remember, if you're new to the channel, remember to subscribe, smash that like button if I earned your thumbs up, and I'll see you in the next one, guys.